presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 7th wonderful Wednesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, what I like to call the 9 rules of the universe. Number 1, the universe says to us, if we don't move, well, if we don't move, I won't move. Or said another way, if you sow, you can reap, but first we must sow. Says to us, number 2, unless you change what you are, you will always have what you've got. Number 3, the way you do anything is absolutely the way you do everything. Number 4, leaders are readers. The question is, what's the last book you read, and when did you last read it? You see, it's not what books cost. It's what it will cost us if we don't read it. Number 5, don't say, if I could, I would. Say, if I can, I will. Number 6, wherever you are, be there. On your way to work, be at work. On your way home, be at home. Number 7, don't set your goals too low. I love this one because if you don't need much, you won't become much. Number 8, happiness. It's not something we postpone for the future. It's something we design for the present. And number 9, time is our most valuable asset. Yet we tend to waste it, kill it, and spend it rather than invest in it. Not you. Thank you for spending your time with us here at TFNN. Respect the rules of the universe because they will respect you. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's begin our day here. Right now, we've got red markets across the board here. Dow is off 6 points. S&P down 3. NASDAQ Composite lead the charge on the way down. Down 0.9% off 39 points right now. Russell 2000 off 9 points, almost 0.9% as well. Let's begin our day. Let's take a look at the ETF structures out here. Let's go see what we've got going on. Let's start off with the small caps with the Russell 2000 out here, which is the weakest. Let's see if we can learn anything here from the weak indice out here. Number 1, the black line going across my screen. I guess there's a number of them. Let's take a look at the squiggly line out here. The black squiggly line, that is the 50. Let me make sure. Is that the, pull this up on my screen here just to make sure that it is. Let's pull this. Why does that say 400 and 200? Let me just do this. Let me just make sure that I've got the 50-day up on my screen out here. We'll make that a blue line. We'll make that a black line. My apologies for that. Let's. I got a different way to do this. Let's just make that the 50-day. Because I thought it was trading at the 50-day. No. It's trading well below the 50-day, so it must be the 200-day. Give me a moment here. I thought I had that set up, but no. Life's throwing me a curveball. So the 200-day exponential moving average, it looks like that's where price is. There we go. Price is traveling right now. Now, the IWM has not been below the 200-day exponential moving average since November in 2012 out here. You can see that price has tested that area twice now. That's on the trading session of April 15th. As well as the trading session of April 28th. Both times intraday, price pierced that and then closed back above it. Right now, the 200-day exponential moving average is priced on the IWM at 109.83. It's trading right now at 108.80. Below that, it's also trading into really 2 swing points, but really the one that's important right now is the swing point that it's trading into, which is February 5th. That high is 109.15. You're at 108.77. The low is 107.27 out there Volume, 60 million shares. First time down to test that out was with 76 million shares, so it was traveling into a swing point that was on April the 15th. That said that it would be back down there. Well, okay, here we are. It's back down there. So far today, volume, 12 million shares in only 45 minutes of trading. That is going into 60 million shares. That's what the swing point is. A close today, inside, volume or not, inside 109.15. That would set up a test of the low of 107.27. If it's coming in with more than 60 million shares and it closes underneath 109.15, that sets up a test for sure, for sure as you can get of the lows out there of 107.27. That is what's going on inside of the IWM. We can also see that it is moving in towards the oversold condition. So this is an important area, the 200-day exponential moving average, the swing point that it's traveling into. The IWM will be key to be taken a look at as to what happens in the as the session here closes today. Let's go take a look at the next week link out here, and that is the Qs. Price had broke out of its descending price channel. It did that on the trading session of April 30th. Price now pulling back inside that level. Testing right now the swing point from April 28th that had 58 million shares. You closed inside it yesterday with light volume, 33 million shares. So far in the first 45 minutes of trading, pretty good volume, 11 million shares. So now that's coming into this swing point relatively hot. A lot of time left in the trading session. But that looks like the 85.11 area looks like that will be tested. Of course, to close back above the descending price channel, that would be somewhat bullish out here. Let's go take a look at. Let's go take a look at the 50 and the 200-day moving average. Let's put that on my screen. Let's go see where those are in comparison to the. Give me a moment to find that. Well, let's just change this here to 20 and 50. Let's just change that to 200. And then we'll be all set. So that's number one. Good. So the black line, I'll put on our screen, the black line is going to be the 200-day exponential moving average. So we're quite a ways away from that inside of the Qs. In fact, the Qs would need to get down to the level of about 83.61. Right now they're priced out at 85.83 out there. If the Qs today close inside 85.54, that's the April 15th swing point. That's got 84 million shares. A close inside there would suggest a test of the low of that swing point, which is 83.28. That would then bring the 200-day exponential moving average into play out here. That's what's going on inside of that ETF structure. Let's go take a look at the SPYs out here. What are the SPYs doing right now? The SPYs they closed inside the swing point from April 28th. That had 135 million shares. Yesterday was a move down on light volume, only 85 million shares. So far today, 23 million shares in 45 minutes of trading. So you do have volume accelerating to the downside. Let's do the same thing here. Let's go ahead and put the 50 and the 200-day exponential moving average up on my screen here. Let's go see where those are at. You've got the 200-day at you're quite a ways away from that. The 200-day is all the way down at 177.96. Price here right now inside the SPY trying to test the 50-day exponential moving average, and that is at a price level of 185.87 out there. It's priced at 186.18. Let's go take a look at the diamonds. The diamonds here, they are priced out at 163.50. Looks like the low of April 28th is going to be tested, 162.78. Volume on that swing point, 7.2 million shares. Yesterday, back with 5.2 million shares. Today, already 1 million shares, a little over 1 million shares, 1.1 as we speak. The 50-day here, I think I got the wrong one on my screen. Let's put the correct. I don't know how I ended up with 400 and 200, but I did out here. So the 50-day exponential moving average for the diamonds out here, 163.16. Looks like that is in the area. That will be tested along with the swing point low from April 28th out at 162.78. The 200-day exponential moving average quite a bit lower. That's down at a price level of 163.16 out there. So that's what's going on inside of the ETF structure. If we go take a look at, curious as to what's going on inside of the liquidity gauges. Let's go see what's going on inside the Euro-Japanese yen right now. Euro-Japanese yen, it looks like that has sold off. So it sold off quite a bit here in just the last 16 minutes, because when I checked on that before the break, it was up towards the highs of 141.93. So now we're starting to see a little bit of a break inside this currency pair. You can see the rising trend line out here. If, in fact, the Euro-Japanese yen closes below the 140-156-ish area where it's traveling at right now, it could very easily move down to 140.38. That is its level of support out there. But if it's able to do that, that would go ahead and put some selling pressure into the markets out here. Of course, a break of 140.38, and that will set a pretty decent sell in May signal out there. That's in the Euro-Japanese yen. We check out in the VIX index. Let's go see what the VIX is doing here. VIX index now above the 50-day exponential moving average. That means today is a very important session. The 50-day exponential moving average, 14.26. Right now, this is traveling at 14.43. So this is all serious action that is taking place as we speak right now, because a close above that, that would be very bearish out here inside the markets. A lot of time left in the trading. We've only been trading for 45 minutes, so we've got a lot of time left in the trading session. But right now, things are not looking good for the bulls. They're looking pretty darn good for the bears. Let's check in on some of the sectors within inside the S&P 500. Let's go see what kind of message they may be sending to us. Let's start off here, upper left-hand corner. I've got the energy sector, the sector that has been the hottest, the one that has been on fire out here. If we take a look at it right now, 94.30 is what it is traveling at. We have seen a shooting star candle that had formed out here that's acting as resistance. That is the April 29th session, 94.66. We saw a test, and that swing point had 8.2 million shares. Yesterday was a test with 7.4 million shares. Not too bad from a volume standpoint, but still acting as a resistance line. Let's draw a line across our screen out here. And that, again, being tested today, trading back below the 94.66 level. So far, not a real reversal candle inside of the energy sector as of yet. However, if you were to see a close or intra-session move below 94.17, and you see a close today below, anywhere below 94.25, you'd get a key reversal session inside of the strongest sector within inside the S&P 500 out here. But as we speak right now, it's only the 6 weighted structure inside of the S&P 500. So from a weighting standpoint, it's not going to go ahead and be able to lift the tide out there. It would need help from the XLK. So let's take a look at the XLK next. The energy sector, or the technology sector. I got the XLF. My apologies. We'll go look at the XLK next. The XLF, the financial sector, though, is the second weighting structure. It's just having an inside day as we speak right now. So nothing major with regard to any kind of sell-off inside of the XLF as we speak out here. So not really providing us with a ton of information. When we get back from this break, let's go take a look at the technology sector, the XLK. Let's go see what it is doing, what kind of volume is behind its move. About 15 minutes into the trading session. Right now, Dow's off 30, S&P down 6. NASDAQ Composite off 51. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 25, S&P down 6. Had a request to go take a look at the SOX index out here, see what it is doing right now. Priced out at 569.37. It is traveling inside of the, the swing point out here. The swing point low is April the 15th. The top of that is 570.50. So it's just slightly inside of that. A close below 570.50, offers with it the opportunity for it to go test the low out at 558.71. The red squiggly line on my screen out here, that's the 50-day exponential moving average. So it is trading just slightly below that right now. It's testing that area, see if that will act as support. That's at 570.94. If, in fact, the SOX is coming down with some, a change in trend has been in place here inside of the SOX, I would say, from a... It's really the change in trend, in essence, took place right back here in this wide-ranging bar on April the 10th out here. If we take a look at this, could, in fact, be set up in A to B equals CD to the downside if it gets some volume picking up to the downside. The 1-to-1 would take you down to about the 550 level out here. Right now, the key levels to be watching for inside of the SOX today is going to be whether or not it closes inside 567.93 and... is that the right number? 570.50. Wanted to make sure I had the right number. 570.50. That is a number to be watching for. Now, what I did say was that we'd go take a look at the XLK. I'm going to go ahead and put up the market profiles out here. So let's take a look at the market profiles. Let's go take a look at each of the sectors within inside the S&P 500. Let's go see if we can identify potential areas of support and resistance. So let's start off with the number one I start off with the number one weighting structure with inside of the S&P 500. If you're watching this on Tiger TV, I've got the TAS market profiles out here on my screen. On the left-hand side, left panel, that's outside of the looking at the actual index symbols. You've got the 240-minute time frame. You've got the daily time frame is next, and over on the right-hand side is the weekly. That way we can go ahead and get a feel for what's going on 3 different time frames. Now, a red horizontal lines going across my screen out here. Those are what's referred to as the unfair high. That's a resistance area. If price gets above that, closes above that, you've got using a market profile system, you are in full bullish mode. The green lines, those are referred to, the horizontal lines, referred to as the unfair lows, or otherwise a support level. When price gets below that, that's where you're free to run to the short side, or it's saying, hey, you should not be long out there. Anywhere in between, you're dealing with what could, in essence, be a consolidation. The blue aqua-ish type of color, that's where you see the largest number of transactions. That's what's referred to as the point of control. So, inside of the 240-minute chart out here, if I explode it up on my screen, I didn't mean to explode it like that. Let me pull it in just a bit here. There we go. You can see what has occurred here in the XLK is yesterday at 8 o'clock in the morning, price ran right into the top of the unfair high, which acted as resistance, 36.57. What took place here at 12 noon yesterday was price closed below that level. Almost at the open here, intra-session, we saw price get up to a high of 36.28. 36.33 was really that unfair low, so it tested. This is the number one weighting structure on a 240-minute time frame basis. So it tested the area of resistance and rejected that area. So where is it that price would likely find support if it cannot climb any higher? Well, let's go take a look at what's going on in the daily time frame for the XLK. In the daily time frame out here, you can see his price is traveling right against the bottom of that unfair low. 35.86 is the number. Price right now is traveling at 35.88. So it has found that level. So if you were short on the 240-minute chart out here, you're now coming down into an area of support. What you would like to see if you were short somehow the XLK with whatever ETF structure you might be playing, you want to see this break through 35.86 and close back below 35.86. If this area holds as support, then you would want to consider maybe closing out that trade, taking a look at the mere fact that the XLK has held support. So number one weighting structure inside of the SPY, it's important for us to take a look at. Let's go see what the weekly time frame is telling us. Well, the weekly time frame says if 35.86 is broken, the next level of support would be the 35.28 area. Let's expand that up on the screen out here. 35.28 should be on a weekly basis the next area of support. You can see that the upper boundary line, that unfair high, that resistance level, 36.65, has been tested several times and has held as a resistance area. That is what's going on inside of the XLK. When we get back, we'll go do the XLF, the XLV. Actually, what we'll do next, we'll do the ES Mini. We'll take a look at that. We'll take a look at the NQ. Then we'll go look at the other sectors. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released.
The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We've got the Dow is off 5 points. The S&P is down 3. NASDAQ Composite, the real leader to the downside, off a little over 1% here this morning. Down 47 points, trading out at 4032. I know I can get it out. Leading the charge at downside, we've got the Priceline off $30 this morning. Zulily, ZU is a ticker symbol. That's off 27%, down $12. Agerian Pharmaceuticals, AEGR, off 28%, down 12. Perigo Company, PRGO, off 8%. VIP Shop Holdings, VIPS, down about 8%. Whole Foods down 20%, off $9 and change. AOL down 21%. Fire Eye off 24% out here. Athena Health down 8% this morning. Google down about 1.5%, off $7.58. That's what's moving to the downside. Moving to the upside here, Cimerix Energy. XEC is the ticker symbol, up a nice 7% this morning, up $8 and change. Pioneer Natural Resources up 6. Strayer Education up 12%. Electronic Arts up 15%. Eris Group up 15%. Caesars Entertainment up 15%. Pegasystems up 15%. Mondelez up 7%. That's what's moving the market. That's what's moving to the upside. Not necessarily moving the markets, but moving to the upside. So let's go back. Let's take a look at our market profile system out here. Let's take a look at what's going on inside of the EES Mini. We'll take a look at it on its different time frames. First, let's look at the longer-term time frame. Longer-term time frame being the weekly chart out here. Now, the weekly chart, support for the weekly trend is going to be at 1839.50. So mark that that number down on a sheet of paper. Right now you're trading at 1859 out there. Still, in essence, in bullish mode on the weekly time frame inside the market profile system out here, making some lower lows with this TAS signal box indicator down towards the bottom. That is the signal box itself, but nonetheless, out here it is still above a level of resistance, and that is at the 1839.50 mark. We take a look at the daily time frame out here. Daily time frame, well, you've got support at 1839. So 1839 is going to be a key level for the ES Mini. At this stage right now, it's not been able to get up to its, the last time was up at the resistance zone. The unfair high was back on the trading session of April the 4th. That number, by the way, is 1892. Any close above 1892 would be very bullish on the daily time frame. So that 1839 is going to be a key area for the ES Mini. If we take a look at the 240-minute time frame, or let's look at the 120-minute. Let's put that up on our screen here. Let's make the 120-minute time frame. Let's go see what that shows as levels of support or resistance. Let's make a wide screen out here. So I've got a linear regression tool. Those are the blue lines going across my screen. We can see here, and you can use those tools here really as potential exit points on any moves up or down. You can see how price hit that level inside the ES Mini as it got down to a low of 1854.50. If we take a look at the ES Mini, I'll go ahead and expand this up a bit. If price gets above 1863.50 and you're using a 120-minute time frame for trading the S&P futures, you would start to take a look at, if you had not already taken profits, you would start taking a look at profits there. The next area of resistance on the way up, if in fact you see a close on the 120-minute time frame above that 1863.50, your next area of resistance to be watching for is 1876.75. Right now it's trading above that level of support on the 120-minute time frame, and if you were short, you would want to make sure that you were tightening your stops out there. That's what's going on the 120-minute time frame. Let's go see what we've got going on inside of the NASDAQ, inside the NQ, and let's look at the same three time frames here. Let's look at weekly, let's look at daily, let's look at the 120-minute time frame. If we look at the weekly time frame, this is kind of interesting. So the weekly time frame here, the level, the unfair low, the level of potential support, that is priced out at 35.0330. What have we seen here so far today? We've seen a test of the low is 34.9750. So price is still above that level. That's the unfair low out there. From a standpoint of moving lower, what you'd be looking for is you'd like to see price this week close below 35.03. If it does that, then the next area of potential support around the 34.35. So keep that number in mind, 35.03. Let's take a look at what the daily chart is showing us. The daily chart here also showing that price has come down to the 34.93 level. This is the week index, right? It's come down and it has touched and it has tested that unfair low area out here. So on the daily chart, other than playing the consolidation, it has not given you a break that, okay, on the daily chart, you should be low. You should be short. The key number there, 34.9350. If you see a close below that, then what the market profiles are telling you is it is okay to be short on the daily time frame. Let's go see what we've got going on inside the 120-minute chart for the NASDAQ here as we just navigate through the market. Remember, this is the weak area that we're talking about. Inside the 120-minute chart, it's just simply showing that the area that you want to be watching for is 35.49. If you were to see a close above 35.49 and you're still short, that would suggest that maybe you want to take a look at taking whatever profits and closing that out. You want to see on the 120-minute time frame, you want to see price stay below 35.49. Let's go to Robert in Lexington, South Carolina. Robert, thanks for calling. Thanks for holding. How you doing this morning?
Doing wonderful. How about yourself?
I am doing excellent. Thanks so much for asking. Now, where's Lexington, South Carolina? What part of the state is that in? Is it coastline? Is it inside? Where's that at?
Well, it's about 10 miles west of Columbia, and Columbia was placed where it is days gone by to be the exact middle of the state.
Okay, good. You want to take a look at the S&Ps. Tell me how I can assist you.
Well, actually, I just had an observation I wanted to point out. We've just completed an ABC down from last Thursday's high.
You're looking at the S&P 500, the actual index itself?
I'm looking at the futures. I apologize.
Oh, no problem. Okay, so you're looking at a daily chart on the ES Mini?
Yeah, I'm looking at actually a 2-hour chart.
2-hour chart, okay.
And what I'm seeing is we completed an ABC down at the lows today, which is also the 38-point retracement of the rally from, what was that, April the 13th? That low?
Yes. Okay, so folks, what Robert's using as his A point out here, I'm assuming is going to be the high at 8 o'clock in the morning on May 2nd. That high out there is at 1886. That's your A point. Your B point that you're using is going to be the 8 o'clock in the morning on May the 5th. That's down at the low of 1860. Your C point was the swing that came in at 2 o'clock in the afternoon, or 2 o'clock in the morning, looks like, on May the 6th, and that's at a price point of 1881. 1-to-1 A to B equals CD. Yeah, you're exactly right. It hit that would have been projected at 1856, and it hit that level. Yep. Okay. Take her away.
Okay, and then you have the the April 13th low up to that last Thursday's high, and we pulled back to 38.2 of that rally. So that's a Gartley buy, right?
It is. I'm going to switch over to a different chart. Let's go put on the 120-minute time frame. So let's go take a look at nice observation. Thanks for pointing that out to everyone in here at TFNN. So let's go take a look at the 120-minute time frame. Let's go draw in that potential Gartley buy pattern out here. So that's a 30-minute chart. Let me switch this to 120 minutes out here. Give me a moment. It should be right in front of me. Where is that 120-minute bar? Where is it? Good Lord.
Well, I'm sure that 30-minute would work.
Good Lord. Yeah, no, it'd be nice to. It should be. It's like, how could that possibly disappear? Somebody's saying, hey, Steve, it's right in front of you. There we go. It is right dead smack in the middle. It was in the middle of it. So if we take a look at the Gartley pattern that is setting up. So when we take a look at that, so here's the Gartley, 0.786 Gartley. Whoa, nice 1.272 expansion. So that is a nice-looking pattern. Now, what you really need to see here is you really need to see some type of confirmation of that, which would be some type of bullish reversal signal is the way that I would be taking a look at trading that. Because if this level here fails, then that sets up a move down to the 1844 level. But tell me, how is it that you're trading it?
Oh, well, I went long, when I saw I had a Gartley going there, I said, well, I'll go long here, and I'm putting actually, I also looked at the low of, let's see what that date is, 428, and that tells me that if it went down, it could go down to 1652.
Right,
make that
right.
a Gartley as well. So I made that my stop level.
Oh, you made your stop level where?
1852.
1852. Okay, so that's great. So you haven't given it much room. So what you've got there is also, and maybe I don't know if you picked up on it, you certainly have also got that nice expansion of a set of swing points at 1.272. So you've got really two Fibonacci numbers coming together right at that 1854.50 level. So that is nice. What you really want to also see, just to give you, so your stop is nice because you've got a tight stop in it. What you'd really like to see, and I'm putting just a 30-minute chart up on our screen here right now, and you'd really like to see some type of bullish reversal signal that would come into play, just to give you a little bit more confirmation that this might be a nice little bottom here. Now, at the moment, you've got a little bit of a piercing candle on a scale of 1 to 5, with 5 being the strongest. A piercing candle is really like a 2 out there. If we take a look at if it were to close, though, as we come into the 11 o'clock time frame here, so we've got another 15 minutes, what you'd really like to do is see it close above the body of that last session out here, and that is at 1864.25. Then you'd have a nice big bullish engulfing candle, and that's what you'd really like to be able to see out there. And then ultimately, you'd like to see it close above the price point of 1867.75. Now, will you adjust your stop up along the way here? How are you going to trade this, or have you picked out a price target? Let's go take a look at those areas.
Well, I really haven't picked out a price target. I've been listening to you and Tom. I think we're going to try and test the high. So,
Okay. Well, let's do this because you've made some money now, so you've identified the stop on the downside. So let's go take a look at a Gartley pattern has basically 5 potential outcomes. The first outcome of any Gartley pattern is that it's going to make a bounce to the .382 level, and that's already taken place here so far, and that's at 1866.50. So you've got your first outcome. Again, I went down to a 30-minute chart just to take a look for some bullish reversal signals, because you'd really like to see that, to see where the bulls are, where they're making their move out here. What you'd also, then your second outcome, so let's assume you get that bullish reversal signal. Your second outcome is going to be 1874. At 1874, you're at the .618 retracement of the Gartley pattern. I would have to say, when you get to if it gets to 1874, you'd really like to go ahead and adjust your stop and protect your profits. Or at least make sure you don't get into a trade that is a potential losing trade. No reason to let that turn into a losing trade. So I would have to say somewhere be around your entry to below the 1866 level out there. Your third outcome is 1879, the .786 retracement area. The real key here is on this 120-minute chart. Is what you should also do. I'd also suggest that you do this is draw a trend line coming off of the lows from 8 o'clock in the evening, Robert. This is on April the 13th. I think you had targeted the April 13th candle is also using a Fibonacci retracement level, as I recall. And so draw a trend line from that low, which is at 1803.25, and then use as your next touch point the level from 2 o'clock in the afternoon. That's the low on April 28th out at 1844. Because in essence, what the ES Mini has done here is it's broken through that trend line. And so from if in fact the S&P, if the ES Mini is going to go test the highs, maybe even take out the highs, whatever it's going to do, it's going to have to get back inside that trend, which you don't necessarily want to see it do. And you can expect that to be an area of resistance. So as price gets up to that 1874 level, not only will you have a .618 retracement, what you will do is you will probably also have you'll also run into the resistance of that trend line. Do you see that area?
Yeah, it looks like we've come close to that. Looks like what we went up to and turned over on.
Yeah, pretty close. Yeah, we got pretty close to that. Robert, do you want to stick through the break?
Well, actually, I have to get off to some other stuff, but I appreciate you covering all this. It was very thorough. Thanks so much.
No problem. Thanks so much for calling. That was Robert in Lexington, South Carolina. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Right now we've got the, let me see what we do have. We've got the Dow up 27 points, S&P up 42 cents, NASDAQ composite off 39. I'm going to go back out to that 120-minute chart time frame that we were looking at with Robert, and a great call on his part here. He identified that 0.786 Gartley buy pattern out here. Now, at the same time, what else was going on that 120-minute chart here? I've got one of my other charting tools on the screen, and if you're watching us on Tiger TV, what we can also see is we had a price relative strength divergent pattern that also was forming down at the low. Let me get my crosshair out here. The low during this 2-hour session here that ends at 12 noon. That's as the ES Mini got down to 1854.50. So we had a price relative strength divergent pattern. We had a Gartley buy with a nice 1.272 expansion of a set of swing points out there. What also is going on at the same time out here is this is on May the 5th. Today's May 7th. So 2 days ago, at the time frame of 10 o'clock in the morning, there was also a hammer candle combined with a bullish engulfing candle that had formed. And what the ES Mini was also doing was testing the low of that hammer candle. As you know, when you close below a hammer candle, if you're long, you're wrong. In this case here, all we've seen is an intra-session test of that hammer candle. So that's also one nice thing when we take a look at the ES Mini. Now, what we don't have, with regard to this price relative strength divergence pattern. We do not have a bullish reversal signal. It doesn't have to occur on this candle session here going into 12 noon. You would prefer that to occur. What would be needed in order for that to happen? Well, you'd like to see a nice bullish engulfing candle. That would be a close above 1867 out there. Then you'd really have just about everything that you needed from a confirmation standpoint of the Gertley buy pattern inside of the ES Mini. Now, remember, that sets up that 0.786 Gertley buy pattern. And if those patterns ever fail, once they're confirmed, if they ever fail, they turn into butterflies. But you got to take things one step at a time. So from a trade standpoint, the way to take a look at it, remember always 5 outcomes of any type of Gertley buy or sell pattern. The first one's already been attained, 1860, 650. The second one would be 1874. That's your 0.618 retracement level. Your third outcome, 1879 and a quarter. Fourth outcome is that 100% move of a move. That's up at the 1886 level. The final outcome is that this actually turns into an A to B equals CD to the upside. That is the ultimate outcome of any Gertley pattern out there. That would then say the ES Mini would make a move to about the 1896 area. That's how you trade it. You adjust your stops along the way out there. That is on the ES Mini. So thank you to Robert in Lexington, Kentucky, that was taking a look at the ES Mini. Let's go take a look and see where we're at with regard to the Euro-Yen as well as the VIX Index. Let's start off by taking a look at the VIX. VIX Index right now is trading out at 1381. So the VIX Index here has given up the 50-day exponential moving average line. That price point, again, is 1424. As long as the VIX is below that, that is bullish. That's where markets will either move sideways to up. So that's a key number to be paying attention to today is 1424. A check-in on the Euro-Japanese yen. Let's go see what that currency pair here is doing. Still just holding the body. It's a little doji candle is what it looks like here. Just holding the bottom of that rising trend line out there. So long as the euro can stay inside there, that too would be short-term bullish. And let's take a look at the New York Stock Exchange here real quickly. Price here on the New York Stock Exchange not doing a whole lot. Still holding its very short-term trend line off that hammer low from April 15th. Folks, it is Wonderful Wednesday. That means our man Basil Chapman, he'll be up next. He may be filling in for Larry, so we might have 2 hours of Basil. Daryl Martin, David White, Tom O'Brien show from 4 to 6. Have a wonderful Wednesday, folks. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.